Welcome to the Unconventional Investor Podcast. I'm your host, Michelle Moses, certified financial planner, licensed realtor, and founder of Me Financial. If you're an accredited investor feeling overwhelmed by managing your portfolio and looking for alternative investment strategies that go beyond the traditional stock market, you're in the right place. Let's head into today's episode so you can start taking control of your financial future. Hello, everyone, and thank you so much for tuning in. I am really excited about this one. I've known about this investment for quite a few years, actually. I have a client who I highly respect, and he cannot say enough about our guest and this investment. In fact, I think it might be mostly all of what he does, because you are going to see that it is fairly safe and straightforward, and you're going to be able to understand it. I know I always say this, and I'm so excited, but I am very excited to have this on the show. So today, I've got Mike Bonn, who is with the Cash Flow Company, and he is a seasoned financial professional with over 35 years of experience in banking and real estate investing. He's closed over $1 billion in conventional and commercial loans and worked with tens of thousands of real estate investors. His mission is to help you elevate your real estate investments to millionaire status so you can live the life you dream of. Thank you so much for being here.
Yeah, thank you for having me. I appreciate it.
Yeah, Mike, we've talked like many years ago, and I've mentioned your investment to quite a few clients. And so I know you have two sides of the business, but We're going to talk about one side of the business, everybody. And then at the end, we're going to get to the other side, because he does work with investors like flippers and all of that, doing hard money lending. However, we are going to talk about how you can become the hard money lender, basically, through Mike's business model and how that works. So, Mike, can you explain the overall investment strategy of it? And then I want to get into the logistics about what some of the legal documents say a little bit later, but just give us an overview.
Well, first of all, we're a short-term lender, which means we're lending people money secured by real estate. So everything that we do there's not a guarantee, but it's secured by a piece of real estate with a mortgage, with a loan. And the whole intent is to help people buy properties that need work, need fixed up, really help the communities, because a lot of people don't go in and fix up these hoarder homes or homes that were left in probate and stuff. So it's really finding homes that need a lot of love, a lot of attention, and us giving them the finance to bring that up to standard. And we do that through keeping it safe in the sense of using a mortgage and title insurance and regular insurance and some other strategies and things that we go through, from background checks to everything. But it's really just about lending people short term, which is usually 6 months to maybe 12 months. Everything that we do short term, because it's a person who's making money on real estate, but also really changing the environment of the properties that they're doing in the neighborhoods too.
Yeah, and I think it's important to have that, because a lot of times I think that stuff can be overwhelming to someone that's not a professional and have a team. And so I think sometimes you are doing a service by coming in and actually, because it costs so much money to fix up those houses, because you're thinking about the yard and the roof, and there is a lot to do when it's a pretty dire situation.
Yeah, we've seen ones just as a newer build that the whole roof was burnt off. So insurance companies didn't want to do anything. The people living there didn't want to do anything. So someone comes in, fixes it up, gets it market ready again so someone can live in it. They can move into a house that's been completely remodeled. And that's what we do. We lend them the money to buy the property and fix it up, typically in local markets, because we know the areas, we know the markets, we know it's the real estate inventory and what it looks like too. But we focus on the lending side. It's always private money that we're doing. So we're taking people's funds who are looking for a little bit better return and giving it to people who need that kind of quick, easy money to run their business.
And what states are you focused on in lending?
Our biggest focus, of course, is Colorado. That's where we're at. Texas, Oklahoma, Ohio, a lot of the Midwest where affordability is still there, where demand is still there. When we say Colorado, we're not in some of the bigger markets, because most of our loans and homes, we're looking for someone who can actually afford a payment. So everything is usually $400,000 or below. We're not looking for $1 million homes to finance. they just have a unique market. And of course, there's a lot of market out there, but it still comes down to affordability. When we do a loan, we lend it to someone. We want to make sure there's a way to make money. If they don't sell it, they can rent it. There's always something that they could do with that property to make it a good venture for them.
Okay. And if they are renting it, so then do they refinance it then out of your program and into something else? Okay.
Yeah.
Okay. So,
Okay.
yeah, go ahead. Sorry.
I was
Didn't
saying
mean to cut you off.
you can't refinance with a traditional loan, bank loan or anything if the property is not rent ready. Our loans are to get them up to the standards of the market so they can get permanent financing through a bank or conventional lender.
Okay. And are you working with a lot of the same home investors, like the real estate investors, or are you always interviewing new ones?
Our typical timeline is about 2 years with someone. We have some, of course, we've had 8 or 10 years, but typically it's 2 years that we have someone, and they'll flip anywhere. Like we just have a new client. He's just flipped 3 properties in 4 months. But it's usually somewhere between 2 and 4 a year, up to, we have some people are pretty aggressive and they'll do 8 to 10 a year. After about 2 years, they usually graduate to either bank financing or they have their own money, or they're just slowing down. But typically it's a 2-year window. We have someone come in and then graduate to something else.
Okay. And so let's talk about the other side of it, the investor side of it, the person that's bringing the cash. So can you explain to me how they come to you? And I know that sometimes they start off and it might be they're reviewing every single deal. And then I assume that they start to trust you. Go through that timeline. Like how much money does it usually take to get started to become a hard money lender? And then what is that process of getting started?
Yeah, typically, like you said, getting into anything new takes a little bit of a learning curve and a little clarity, a little confidence to understand what's happening. So it's usually people walk through each step to everything from where's the house, what does it look like, what are they doing with it, who's borrowing the funds. They do anything and everything to look at it. Most of our people who have money with or are doing loans with us, they started in 2009, 2010. So they've been around for a while, so they get used to it. But typically it is we sit down and we say, okay, how much are you looking to put into it? Because we have loans that are $50,000 and we have loans that are $2 million. Different buckets for different people. And it's really about
so you don't have a minimum.
We don't. I'm doing a loan here in probably tomorrow for a friend for $15,000. It's a small loan. We don't like to do a lot of those kind of loans, but in the same sense, it's a good loan. It's a quality loan. It's here local. It's easy enough. If people want to, part of what we want to do is make sure we have what we call an exit strategy. We're a short-term lender. We want to make sure we understand what they're doing with the money and how we're going to get our money back. So if it makes sense, if the security is good, in our world, security means there's a lot of value in the property. Say it's worth $200, we're lending $120. There's a lot of equity in the property. Unlike at FHA or VA where they'll lend up to 100% of the actual value, we don't lend there. We're at a different loan to value. So typically people come in and it takes them, some people takes them a couple of months to get the feeling, the clarity, the confidence of doing this. And they have to understand what it is. It's just a loan to someone, and we're securing it with a lien, a mortgage, a deed of trust on their property. And we close to a title company who makes sure it gets recorded and everything is done. It's a different, probably in 1970 and before that, a lot of people were into lending privately and banks took over and everything. And now it's not as common. So people have a little bit of a stepping stone to get to and understand about lending people in your community money again. We just do it secured instead of unsecured.
And so when you're actually doing the documents at the title company, whose name is the lender on the document? Is it your company or is it this investor?
That it's the person who is lending the money, that we're just they hire us as a facilitator to find it and do that. And then it's John Doe's IRA, or because you can fund these with self-directed IRAs or savings, but it's ideally their information and it's in their name. And the reason is then it's their mortgage, their deed. Anything happens around the world, they still have that lien in that mortgage, and they have a title report or title policy, insurance policy, stating what lien position they're in too.
And this is why I really like your investment, is because it isn't your company on the loan documents, that it is IRA, or if you put in cash, then it is actually this John Doe's name. Because then if something happens, then they could foreclose or take the house back. But I know that we'll get into that you have other investors that the house would probably get sold to, and then other things would happen, correct?
Yeah. The idea is when we sit down and we talk to people, it's about risk tolerance, just like anyone else would do. What would you like with risk? And in our world, risk is we just did a loan for someone who owned a home free and clear. It was worth $500,000. We gave her $50,000. Low risk in our world. It's in Denver. We know the area. That's a low risk, probably a lower return too, than someone who will take a little bit higher risk. We have people who their whole lives has been in the finance world. So they understand loans and everything else like that as investors. And there's people who just want something a lot better than a CD. They don't want 3.5 or 4.5. They want something.
Well, this is a lot better than a CD.
It's just understanding each person is unique in what they like. And that's what it's
true. That is very true. And so when you're I don't know. I have all these questions that I want to ask. Is that so? You do the loan, you have the investor, you actually have the investor on the actual loan itself. And so, are you taking a fee on the settlement statement at the title company for each transaction? Is that how you're then making money?
Right. Yep.
Okay.
Yep.
And then can we talk about what is the going rate for, or what in the past has been the rate that people have been making? Because I know that we can't project into the future.
Yeah, and it's changed a lot over the last 6 or 7 years because there's a lot of Wall Street money, Chiavis and everything who's come into this space before there was none. So they're more prime based. So they're probably lending out at, like right now, the prime is 6.7. So they're probably lending out a prime plus 2 or 2.5. So it's, I would love to say it's 9, 10, or 11, but if the Fed keeps dropping, a lot of these Wall Street companies will drive our whole market a little bit lower. I know like in 2020, our low was about 8.5%. Now it's over 10, but it will fluctuate somewhere in between there. All I say is we'll fluctuate with prime a little bit, but so will any other options they have out there. But it's still at least double what you're going to find from any bank. But prime
or money market, you mean?
Yeah, or money market.
So it'll be double whatever a money market is usually.
I don't know what a money market is. I know like CDs are like 3.5 to 4.5, but I don't know what.
Yeah, they're about the same.
Yeah, so right there.
Okay. So that can be what you expect. And so are they splitting any of that interest with you when they make it, or are all the fees paid when you close at the title company?
That's where it comes down to, are we helping them collect like service payments and stuff? A lot of people, we have ACH subs, so we collect the payments and we send them out. Other people are more hands-on. They're just like, find me a loan that looks like this. We find it, we get it closed, we set it up, we get our fee, and we're done. And they take it from there because that's what they want to do. Other people are like, no, I don't want to do any of those kind of things because it's still a loan. There's still things that you have to go through and like, why is it?
Keep track of.
Yeah. Keep track of and all these other things. So it just depends what someone wants. And I say that because there's so many different requirements that people want. I just want commercial properties. I just want people with homes in it. Like everyone has their wants and likes and wishes. I want something downtown. I want something in the country. Everyone has a comfort level where they like their money.
Okay, so they have a comfort level of where they like to lend.
Yep.
And so then that depends on how much they make. And then there's also a comfort level in if they want to manage the service, the loan, we'll say. Yeah. So some people want to service the loan. I can't imagine. Anyway, they must be really smart because to keep track of all the interest and the daily interest and all that, I know there's tools out there, but I don't know. I don't know that I'd want to mess that up
Yeah,
or have
AI
a chance of messing that up.
AI helps a little bit, and banking now helps a lot, from Venmo payments to, stuff like it's a little bit easier than it was even 8-10 years ago.
Yeah, no, I'm sure. Still, I don't know. Okay, that's really great. I mean, that sounds like a really great investment, honestly, and straightforward. And I think that's why I've always told people about your investment is that it's just because a lot of the other investments that I've had on the show, it's more you're putting it in a pool, and then the pool of XYZ Corporation is the one that's lending to the flippers. And I'm calling flippers because both sides are investors on this. And that doesn't really give you security because then if there's a foreclosure, then it's the company that's dealing with it and then taking the fees for dealing with it. And like when they're managing things, and they're obviously taking a fee for all of that, and then they're taking a fee every single month or year to just be managing the fund. Whereas yours is very different, where the investor can actually have their name on the note and there is no middleman if something goes wrong.
No, they have complete authority. They could extend it if they want. They could do so many different things that they want to do if they feel comfortable doing that. And the other beautiful thing about short-term loans, like 6 to 12 months, there's not going to be a lot of market changes unless something really crazy happens. But there's not going to be a lot of changes that are going to happen that you have to go through. Like over a 5-year period, there's a lot of ups and downs. And if you're trying to get out of your note when it's down, there's just a lot of variables that you just can't control. But I could see what's going to happen in 6 months, typically, like within some variable. In the next 5 years, it's a little bit different where values are going in and everything like that. So we like to keep it short term. We like to keep it, of course, non-owner. We don't do anything where someone lives in the property that owns the property. Just totally different rules for that.
No, I think this is a great investment. And I haven't heard of other people doing like what you do the way that you do it, or are there just a ton of you and I've never heard of it?
I think there's a lot. I mean, there always has been kind of like in the cottage industry, like here in Colorado, Denver, I would say there's 100 people lending private money. A lot of it's just their own money. Some of it they raise like through Reg D or Reg A, and they raise some money and put it in a pool.
Right. They put it in a fund, or their minimum's like $1 million. It's just not where normal people could invest.
Exactly.
Yeah, and I want to tout Mike a little bit here too, because a lot of his website is touted towards the flipper side of teaching people how to flip houses, and he even has a book. So I'm going to put his website in the show notes, and you can go, and either side is he can help with a lot. If you're looking to find financing so that you can get into real estate investing, he can also help with that. I have read your book, Mike, and very simple, easy to read, easy to understand. Again, I just think it's a very straightforward, unlike if you guys have been listening to the show for a while, there's a lot of investments I've had on where there's just fees all over the place. And I think this is just so straightforward. I love that it's easy to understand.
We've been lending to each other for thousands of years. It's just a different ticket. I'm going to send you like how to do notes with your retirement or whatever. I'll just send you the PDF. And I don't know if you could add that to the website. I don't know if you could download PDFs. I'll just send that to you so you can just access it right there.
That would be great. And guys, I will also put in the show notes the episode that I have with self-directed accounts with CNB Custody, who I use for my self-directed accounts. And I don't know if you only work with certain people, but you can do this through your IRA or whatever accounts that you want, as long as it's self-directed. And you can do all kinds of things with self-directed. I've even heard of people buying cows.
I'd heard that one. That's new to me.
Yeah, there's all kinds of things in the like even some like African animals for hunting and stuff. So been very interesting. Yeah, I've seen it all.
There's probably some kind of money in there, but buying animals and interesting.
Yeah, I don't know. There's different strokes for different folks. So
that is it. That is perfect put.
Yeah, Mike, this has been great. Thank you so much for being on. I know that I talked to you many years ago and I've stayed in touch, so I'm really glad to know a little bit more details about what your business is, and I can't wait to talk to more people about it.
Sounds good. I appreciate it. Thanks.
Yeah. And you guys, thank you so much for listening, and let me know if you have any questions or want to book a call with me. I do offer a free 15-minute consultation if you need anything, or if you want to see what it's like to work with me. I do specialize in alternative investments inside and outside of the stock market. Thank you so much for listening. This is a lot of fun to do, and I hope you have a wonderful day. Thank you for listening to the Unconventional Investor Podcast. I hope you feel more confident in how you can grow your wealth using the strategies I shared in this episode. If you're ready to take the next step in diversifying your portfolio outside the stock market with alternative investments, head to mefinancial.net/contact us to book a 15-minute consult call with me. Let's discuss how we can work together to achieve your financial goals. Until then, I'll see you on the next episode.